All right, ready to dive into some seriously bright ideas.
Literally.
We're taking a look at IKIO Lighting's Q2 FY25 results.
Oh, interesting.
You know those decked-out RVs all over Instagram?
Yeah.
IKIO is often the company behind their incredible lighting. Today, we'll
Yes.
unpack if their financials are as impressive as their illuminations.
And more importantly, what those numbers mean for, for your investments.
Right.
So let's start with a quick snapshot.
Okay.
Revenue came in at $12,250 million.
Right.
A slight dip from last quarter, but still up year over year.
Okay.
The real eye catcher, though, is that gross margin.
Yeah.
Sitting pretty at 43%.
Wow. Now, a 43% margin, that's not just a flicker.
Right.
That's a full-on spotlight. What's
Yeah.
driving that kind of performance?
It's a mix of savvy decisions, really. First, they're shifting towards higher margin products. Think less standard bulbs and more specialized lighting solutions, you know,
Yeah.
the kind that command a premium.
Right, right.
Second, remember that new Noida facility they built?
Oh, yeah, yeah.
It's starting to pay off big time in terms of operational efficiency, lower production costs, it equals fatter margins, and ultimately a healthier bottom line.
So that shiny new factory is more than just a pretty facade.
Exactly.
It's a strategic investment that's already generating returns.
Mm-hmm.
But let's not forget, IKEO is not just resting on their laurels, are they?
Not at all. They're continuing to invest in capacity expansion.
Okay.
With the second phase of their Greenfield project slated for completion by March 2025. This tells us they're confident about future demand.
Yeah.
And are laying the groundwork for continued growth.
Smart.
They're also strategically deploying the funds they raised from their IPO last year.
Smart move. It sounds like they're striking a balance between fortifying their core business and setting themselves up for future expansion.
Exactly. They've completely paid off their debt.
Oh, wow.
A sign of financial prudence. And are plowing a significant chunk of that IPO money back into the new facility. They've also earmarked funds for general corporate purposes, which we can dive into later.
Okay, I'm picking up on a theme here, strategic expansion. And speaking of which, they're not just expanding their facilities.
Yeah.
They're expanding their product lines, too. IKEO is taking a leap into the world of hearables and wearables.
Interesting.
Think earbuds and smartwatches. They've even snagged orders from major domestic brands. This seems like a bold move for a lighting company.
It is bold, but it's a calculated risk that could pay off big time.
Okay.
The Indian Electronics Manufacturing Services market, or EMS market, is projected to explode,
Wow.
growing at an astounding 28% CAGR.
That's a lot.
By diversifying into consumer electronics, IKEO is tapping into a rapidly growing market and reducing its reliance on the lighting sector alone.
So they're not just illuminating homes and RVs.
Nope.
They're looking to illuminate our lives with cutting-edge tech gadgets.
Precisely. And they're coming in with a bang, securing those orders from established brands right out of the gate.
Wow.
It shows they're not just dipping their toes, they're diving headfirst into this new venture.
And let's not forget about their existing ventures. They're not solely focused on the Indian market anymore, are they?
No, they're branching out. Their expansion into the Gulf market is showing promising results,
Interesting.
particularly in their product display segment. Think visually appealing lighting for things like commercial refrigerators.
Okay.
A niche market, but one with a lot of potential.
So they're showcasing their design expertise in a whole new region. What else are they doing to broaden their reach?
They're also strengthening their relationships with U.S. energy services companies,
Okay.
or ESCOs.
ESCOs, okay.
These companies help businesses become more energy efficient. And IKEO is seeing increased sales of their industrial and solar products to these ESCOs. It's a smart play, aligning themselves with the global push for sustainability.
It sounds like they're not just selling lights. They're selling energy solutions. And with the growing emphasis on going green, that's a smart market to be in.
Yeah.
But hold on, before we move on, let's rewind a bit. You mentioned general corporate purposes as one of the areas they're allocating funds toward.
Mm-hmm.
What exactly falls under that umbrella?
Well, that's where it gets really interesting. That allocation likely includes funding for these new product initiatives,
Okay.
particularly those in the consumer electronics space.
Right.
They're also probably looking at strategic acquisitions to bolster their existing capabilities or expand their reach even further.
Acquisitions, new product lines, international expansion. It sounds like IKEO has a lot cooking. But what I'm really curious about is their commitment to the Make in India campaign. How does that philosophy play into their operations?
It's woven into the very fabric of their company. They've adopted a vertically integrated approach,
Okay.
meaning they control virtually every step of the production process in-house. From design and development to the final assembly and testing, it all happens under their roof.
So they're not just assembling parts, they're creating a complete ecosystem within their own facilities. But what's the advantage of that?
Well, this vertical integration gives them incredible control over quality and timelines.
Right.
They don't rely on external vendors, which can often lead to delays or inconsistencies.
Yeah.
It also allows them to be more agile and responsive to market demands.
Well, I see.
If they need to ramp up production or make changes to a product, they can do it quickly and efficiently.
So they're not just making in India.
Nope.
They're mastering it.
And this commitment to make in India aligns perfectly with the government's push to boost domestic manufacturing.
Of course.
It can open doors to tax incentives, preferential treatment in government contracts, and even greater brand recognition among consumers who are increasingly looking to support local brands.
It sounds like a win-win on multiple fronts. For IKEO, for the Indian economy, and for consumers who value high-quality, locally made products.
Exactly. And this vertical integration also plays a crucial role in their expansion into consumer electronics. They're not starting from scratch.
Right.
They're leveraging their existing expertise in design and manufacturing and supply chain management to hit the ground running.
It's like they've built a powerful engine, and now they're attaching it to a sleek, new sports car.
That's a great analogy. They've got the power, the infrastructure, and the vision to really make a splash in this new market.
So to recap, we've got a company that's not afraid to take calculated risks, invest strategically, and embrace innovation. They're expanding their facilities, diversifying their product lines, venturing into new markets, and all while staying true to their Make in India ethos. What's not to love?
Well, there are always challenges to consider. Managing this rapid growth effectively is key.
Yeah.
They need to ensure that their ambitious expansion efforts don't overstretch their resources or compromise the quality that's become their hallmark.
Right. It's one thing to dream big, but it's another to execute flawlessly. And let's not forget, the consumer electronics market is a whole different beast. They're going up against some global giants, and they need to find a way to stand out in that crowded arena.
Absolutely. They're going to need to be laser focused on innovation and quality to differentiate themselves. They also need to carefully consider their pricing strategy and how they're going to position themselves in a market that's already saturated with well-established brands.
It sounds like there's a lot at stake, but they've shown a knack for identifying promising niches. From high-end decorative lighting to those specialized RV lights, they clearly have a sharp eye for market opportunities.
And their success so far indicates that they're not just chasing trends, they're anticipating them.
So while there are challenges ahead, IKEO seems to be approaching them with the same strategic foresight and meticulous planning that's brought them this far.
Indeed. Their Q2 results show a company that's on the move.
Yeah.
And I'm eager to see what they illuminate next.
Me too.
It's fascinating, really, how IKEO is so strategically positioning themselves. Expanding capacity, diversifying product lines, venturing into new markets. They're weaving together quite the compelling growth story.
It's like they're building this, I don't know, like this multifaceted, luminous empire. And they seem to be doing it with a keen understanding of where the industry is headed. Take that impressive 28% projected growth in the Indian EMS market we discussed earlier.
Exactly. IKEO's move into hearables and wearables is a direct response to that booming demand. But they're not just riding the wave.
Right.
They're positioning themselves to be a dominant force. Think about it. They already have the manufacturing prowess, the supply chain networks, and now with those orders from major brands,
Oh, yeah.
they're securing a foothold in the market before it even fully takes off.
So they're not just entering the game, they're setting themselves up to be major players. But let's zoom out a bit. What does this expansion into consumer electronics signal about IKEO's long-term strategy? Are they moving away from their lighting roots?
Not necessarily moving away, but definitely evolving. They're not content to be just, a lighting company.
Right.
They're aiming to become a powerhouse in the broader electronics manufacturing space. They're leveraging their expertise in design, manufacturing, and supply chain management to create a more diversified and resilient business model.
A model that can weather the inevitable ups and downs of any single market. It's like they're building a stronger foundation for long-term success.
Precisely. And it's a smart move considering the cyclical nature of, well, of many industries.
Yeah.
By diversifying, they're creating multiple revenue streams and reducing their reliance on any single product or market.
You know, while this foray into consumer electronics is generating buzz, we shouldn't overlook their continued success in their, uh, in their core lighting business. They're still at the forefront of innovative lighting solutions.
Absolutely. From those visually stunning decorative lights for homes to the highly specialized lighting for RVs, they're known for pushing the boundaries of LED technology.
Yeah.
And let's not forget their commitment to sustainability,
Yeah.
which is well, it's a growing concern for consumers worldwide.
Right. Their energy-efficient solutions are not only good for the planet, but also help their customers save money. It's a win-win proposition.
Yeah.
So we've got a company that's excelling in its core business, strategically expanding into new markets, and diversifying its product portfolio. From an investor's perspective, it paints a pretty compelling picture.
It does, but as with any investment, it's crucial to dig deeper and understand the potential risks and challenges.
Good point. What are some of the hurdles they might face as they embark on this ambitious growth trajectory?
One key challenge is managing this rapid growth effectively. They're essentially juggling multiple balls in the air right now,
Hmm.
expanding their capacity, entering new markets, launching new product lines. They need to ensure that these efforts don't strain their resources or compromise the quality of their existing operations.
It's a classic case of growing pains. They
Right.
need to scale their operations while maintaining the quality and efficiency that have brought them success so far. What else should investors be watching out for?
Competition. The consumer electronics market is incredibly crowded with both domestic and international players vying for market share. IKEO will need to differentiate themselves not just on product features but also on brand identity and marketing.
They're going up against some heavy hitters.
Yeah.
They'll need to convince consumers that their products are worth the premium price tag, especially in a market that's already saturated with well-established brands.
And let's not forget the complexities of navigating new markets, each with its own unique regulatory landscape and consumer preferences. It's not as simple as as just replicating their Indian success story in other parts of the world.
So while the potential rewards are substantial, the risks are real. But what makes me optimistic is that IKEO seems to be approaching these challenges with a healthy dose of caution and strategic planning.
They're not just chasing growth for growth's sake. They're making calculated moves, investing wisely, and staying true to their core values. That's a recipe for sustainable success.
Speaking of core values, their commitment to the Make in India campaign is another factor that could give them a competitive edge.
Absolutely. Their vertically integrated approach is not only about control and efficiency, it's also a statement of their belief in building a robust domestic manufacturing ecosystem.
And that can translate into tangible benefits from tax incentives and preferential treatment in government contracts uh, to stronger brand loyalty among Indian consumers who are increasingly proud to support local businesses.
It's a strategic alignment that benefits both IKEO and the Indian economy. It positions them as a leader in the Make in India movement, which resonates with both consumers and policymakers.
So while there are challenges ahead, they're also well positioned to capitalize on the immense opportunities presented by the evolving landscape of the electronics industry.
And it's not just about the bottom line. Their success is it's a testament to the ingenuity and an entrepreneurial spirit that's driving India's economic rise.
It's uh, it's truly inspiring to see an Indian company making such bold moves on the global stage. But before we get too carried away with the big picture, let's bring it back down to earth. What are some specific financial metrics investors should be keeping an eye on to gauge IKEO's progress?
Well, beyond the top-line revenue and gross margin figures, I'd be closely watching their debt-to-equity ratio. They've wisely paid off their debt, but as they invest in expansion, it's essential to ensure that they're not taking on excessive leverage that could jeopardize their financial stability.
So keeping an eye on their balance sheet is crucial. What else?
I'd also be tracking their return on equity,
Okay.
or ROE.
ROE. Yeah.
This metric indicates how efficiently they're using shareholder funds to generate profits. As they venture into new markets and product lines, a healthy ROE will be a key indicator of their ability to allocate capital wisely and generate solid returns for investors.
So we're looking for a company that's not just growing, but growing profitably. What about metrics specific to their new ventures, like their foray into consumer electronics?
For that, I'd focus on their market share within the hearables and wearables segment. How quickly are they capturing market share? What's their customer acquisition cost? Are they building brand awareness effectively? These are all critical indicators of their ability to compete in this new arena.
It's like they're entering a whole new race, and we need to track their lap times to see if they're keeping pace with the leaders.
Exactly, and don't forget about their research and development spending,
Right.
or R&D.
Right. Yeah.
In a fast-paced industry like consumer electronics, continuous innovation is crucial for staying ahead of the curve. Monitoring their R&D investments will give us insights into their commitment to developing cutting-edge products that can capture consumer attention.
So we're not just looking at their financials, we're looking at their strategic investments as well. They need to demonstrate a commitment to innovation if they want to play in the big leagues.
And they need to be agile, adaptable, and willing to pivot if necessary. The consumer electronics market is constantly evolving, and what works today might not work tomorrow. They need to be able to anticipate trends and adapt their strategies accordingly.
It sounds like there's a lot to keep an eye on, but that's the nature of investing in a dynamic company like IKEO. They're not just standing still; they're constantly pushing boundaries and exploring new horizons, and that's what makes them so exciting to follow.
It is. They're a company that's not afraid to shine, and their story is far from over.
And that wraps up part two of our deep dive into IKEO Lighting Ltd. We've explored their strategic moves, the challenges they face, and the metrics investors should be tracking. It really is inspiring to see an Indian company like IKEO not just competing, but thriving on the global stage. Their journey from a components manufacturer to a lighting leader, and now a contender in consumer electronics. It speaks volumes about their adaptability and ambition.
Their story really highlights the power of strategic thinking. They haven't just reacted to market trends.
Yeah.
They've anticipated them. That proactive approach, combined with a commitment to innovation and financial discipline, it's set them up for remarkable success.
And let's not forget the human element. This story it's a testament to the talent and entrepreneurial spirit driving India's rise as a global economic force. But it's not just about national pride. It's about smart business. Their commitment to the Make in India initiative it's a savvy move, aligning them with government priorities and resonating with a growing base of consumers who value locally made products.
It's a brilliant example of how a company can weave social responsibility into its core business strategy, creating a win-win for themselves and the community they operate in. This approach, combined with their vertical integration, gives them an edge in terms of cost control, quality assurance, and responsiveness to market shifts.
It's like they've built this. I don't know, this incredibly efficient machine, fine-tuned for the specific challenges and opportunities of the Indian market, and now they're taking that finely tuned machine and applying it to the global stage, particularly in the rapidly expanding consumer electronics sector.
And that's where things get really interesting. Can they replicate that success in a completely different market, one dominated by global giants with established brands and vast resources?
That's That's the million-dollar question. And while only time will tell, their early moves in the hearables and wearables segment suggest they're not just dipping their toes; they're diving in head first, securing those crucial orders from major brands right out of the gate.
It's a bold strategy, but one that's consistent with their history of identifying and capitalizing on promising niches. Think back to their success in specialized lighting solutions, from high-end decorative lights to those customized RV lights. They have a knack for spotting opportunities where others see only challenges.
It's like they have this internal radar constantly scanning the market for the next big thing, and they're not afraid to make bold bets, even if it means venturing outside their comfort zone.
But it's not just about being bold. It's about being smart. Their decision to fully repay their debt before embarking on this expansion spree it's a sign of financial prudence. They're not just chasing growth at all costs. They're building a solid foundation for long-term sustainable success.
It's like they're laying the groundwork for a skyscraper, ensuring the foundation is strong enough to support their ambitious heights.
Exactly, and that commitment to financial discipline will be crucial as they navigate the complexities of the consumer electronics market. They'll need to invest heavily in R&D, marketing, and brand building to compete with the established
Of
players.
a marathon, not a sprint.
Yeah.
And they'll need to be strategic, agile, and adaptable to stay ahead of the curve in an industry that's constantly evolving.
But if their track record is any indication, they're more than capable of rising to the challenge. They've consistently demonstrated a willingness to embrace change, to push boundaries, and to think outside the box.
So while there are undoubtedly challenges ahead, IKEO seems well equipped to navigate them. They have a clear vision, a strong financial foundation, a commitment to innovation, and a provability to execute.
And perhaps most importantly, they have that intangible quality, that entrepreneurial spirit, that hunger to succeed, that sets apart the truly great companies from the rest.
Well, it's been a truly illuminating deep dive into IKEO Lighting Ltd. We've explored their financials, their strategic moves, their challenges, and their incredible potential.
And as we've seen, their story is far from over. They're a company on the move, constantly evolving, always striving to illuminate new possibilities.
So keep an eye on IKEO. They're a company that's not afraid to shine, and their future looks brighter than ever. Thanks for joining us for this deep dive.